Information provided by Wall Street Petting Zoo is for educational purposes only and not intended to be financial advice. Please consult with a licensed financial advisor before making any financial decisions.
Joe Biden has been declared president-elect of the United States. How will this affect stock markets? Robert and I will discuss. Hello and welcome back to the Wall Street Petting Zoo. This is our This Week at the Zoo segment in which we review the week's market news and look ahead to the coming week. I'm Christopher Smith.
And I'm Robert Coburn.
Okay, Robert, let's dig into the election results. We did get Joe Biden declared victor in the election yesterday, and no real unrest yet. A lot of people were fearing that there would be riots in the streets. We did get a bomb threat. We had a couple armed guys arrested outside the Pennsylvania vote counting center. There was a crowd that at one point sort of tried to storm the voting center, but on the whole, pretty peaceful election so far. We'll see if that holds, but so far that seems to be the case. Presumably stocks will go up on that news. But you were looking, I think, particularly at gun stocks, right? Give us your thoughts on those.
Yeah, so gun stocks usually under Democrats, typically perform pretty well, and this is only because there's a lot of fear that Democrats are going to put a lot of restrictions on gun regulations, which they usually have a hard time doing because the right side obviously wants to keep the Second Amendment. They want to keep as little regulation as possible on guns, and so anytime there is a threat to gun regulation, basically what ends up happening is people go out and buy guns and ammo. So this is good for gun stocks like Smith & Wesson, for example. So when Trump was initially looking like he was going to win this week, gun stocks actually went down. But then as Biden slowly chipped away in like Pennsylvania, Georgia, over the tail end of the week, you actually saw the stocks actually go back up, and it looks like they'll probably continue to perform well, assuming that Biden continues to be the winner and there's no judge's decision to overturn the Electoral College.
I haven't heard a lot of rhetoric from the right this election cycle about Biden wanting to disarm people. Maybe I just haven't been paying that much attention to that particular line of argument. But
there actually has been. He actually has a detailed gun plan in which he wants to limit a lot of things, similar to that of California. The limit on large magazine sales. So there's actually a detailed plan that Biden has about gun regulations. So that's why there's a lot of fear from the right on that.
Okay. And I do think that were there to be any election unrest, I think that probably would be ultimately good for gun stocks as well, because frankly, the more that Americans distrust each other, the more they're going to want to arm themselves against each other. So
it goes
something to keep an eye on.
Yeah, it definitely goes to the basic fears of humanity. Like they just want to make sure that their homestead is safe, and that's one of the ways to do it is the American way of owning a gun.
Yeah, I think also that the general anxiety on the right that sort of Biden is going to encourage riots or whatever, that might play into that as well. Let's talk about some other categories of stocks here and how they might react to this election. How about cannabis?
Cannabis, and I also want to talk about Oregon specifically. I don't know if you read about the legislation they passed, but they actually decriminalized more than just marijuana. They decriminalized methamphetamines, and I believe they also decriminalized hallucinogens. So we're actually going to see probably a lot more out of not only cannabis stocks, but as well as like LSD stocks. I know one of them, Mind Medicine. This stock that I've been looking at has been going off recently, and which is basically like a hallucinogen, LSD type research firm, and they basically just test the way LSD works with helping with mental health. So I anticipate, as long as the federal government doesn't step in for alternative medicine in terms of harder drugs, is actually going to benefit these stocks as pretty well.
Yeah, I think there were like 8 or 9 states that passed some kind of drug legalization this election.
Yeah, I think
And
New Jersey was one. Um, there was one near the Canadian border, that's why I think we saw not marijuana, Aurora Cannabis stock jump almost $4 this week. So the marijuana reform is going along pretty well. The only thing then left that's really going to make it skyrocket is if it gets taken off as a Schedule 1 drug.
yeah, and then we've also got Twitter reacted somewhat negatively to the the election result. I think in the impression probably that Donald Trump has been really good for Twitter, and that maybe the reduction in his influence will be bad for Twitter.
Yeah, they thought if he was to leave the platform, that there would be a lot less traffic. And I don't anticipate Trump leaving the platform anytime soon. I think he may end up running again in probably 2024, and he's used Twitter as as a way to rally his supporters, and I don't think that's going to stop even if he doesn't decide to run in 2024. I'm pretty sure he'll probably try and get one of his sons to run, or whoever he decides to support. I definitely think he's going to leverage Twitter in that regard, because it's been a strong tool for his platform.
Yeah, you don't just give up a tool like that when you've built up so much cachet on it. I think another category of stocks that might benefit from a Biden victory is China stocks, any company that does a lot of business with China, or any Chinese company that is listed on US exchanges in the United States. There's been lots of talk about Trump delisting Chinese companies. Of course, he waged a trade war with China. China, I think both Democrats and Republicans agree, is a bad actor. And so it may be that Joe Biden will continue some retaliation against China, but I doubt that he will continue tariffs specifically. I think that most of the pundits view tariffs as not a very effective tool for dealing with China. So we'll see what his China policy looks like. But I think that probably in the near term we will see some rallying of China stocks on news of a Joe Biden victory.
Yeah, I think he's gonna probably focus more on less tariffs and more on the copyright and intellectual property side of tariffs. Those sides.
Right. I wouldn't be surprised to see some, big Chinese tech firms like Alibaba and Baidu that may be involved in technology theft take a hit. And I also think that we'll probably see some big US tech firms take a hit on the fear that the Democrats will try to pursue some kind of antitrust legislation, and also on the fear of corporate tax hikes, because, of course, Biden wants to increase the corporate tax rate, which would disproportionately impact the most profitable firms, which are those big tech companies. So some possibility of that. Although with a divided government, assuming that Republicans remain in control of the Senate, the Democrats would have a check on their power. And that's another thing that I think we need to talk about here. Going back to 1989, there's a research firm called Jefferies that has looked at stock market returns under a Democratic president in periods of divided government and non-divided government. When a Democratic president is checked by a Republican House of Congress or Senate, the average gain in the S&P 500 has been about 34%, whereas when the Democrats have a unified Democratic government, the stock market return has been much lower at about 22.5%. So about an 11-point difference in stock market returns, depending on whether there's a divided government or not a divided government. So I think part of the reason that we saw the stock market rally so strongly as it looked like Joe Biden was going to be the victor this week is because it also looked like Republicans were going to keep control of the Senate, which is actually, in terms of the data, if you look at historical data, that is the most bullish possible scenario in terms of historical stock market returns, is a Democratic president with a divided government.
And that kind of makes sense because if you think about it, Republicans really focus more on the business side, and when it comes to money, I think that's good that it kind of keeps the Democrats in check in terms of making sure that businesses are being thought of, and it's not just one side of the aisle.
Yeah, I think you end up getting sort of the best of both parties. You get the Democratic leadership that will call for, deficit spending and stimulus when necessary, but that is always going to be checked by a Republican Congress. And I think then you get kind of a meeting of the minds where both parties bring the best of what they have to the table. And then one last thing to talk about here, I think, is four-year election cycle theory, which suggests that inaugural year returns for a newly elected Democrat tend to be really strong. It's average of about 22% inaugural year returns when you've got a Democratic president, which is quite a bit. So that suggests we could have a big green year next year. And I think there are some other reasons to expect that as well. We've got the likelihood of stimulus coming next year. So potentially we could have really strong continued stock market rally on news of stimulus. What do you think of that, Robert?
I think it will. It's really dependent upon COVID and how Biden is going to tackle the COVID issue on top of trying to get the economy reopened. So I think and I think this is a lot of what Republicans fear, is that that Biden's going to close the country, and businesses are going to close. And there have already been closing, but they're afraid that he's going to force close through some executive order, which I don't think he's going to do. And I think that fear is kind of unjustified, because I don't think anyone in their right mind would force the country to close. But I think he's going to be smart about it in terms of, it's like, okay, what worked in these last 8-9 months that helped the areas to prevent COVID, and let's use those strategies to kind of reopen the economy, and let's reopen the economy to basically not necessarily just reopen it and let people go at it as they were before, but let's have these restrictions in place to prevent people from spreading COVID more frequently than they would have.
Right. Yeah, I think you're right. I think that when you actually read Biden's COVID-19 response plan, it's like it doesn't include any talk of mandatory economic shutdowns. What it does include is that he wants to establish a group that will issue guidance, a group at the CDC that will issue national guidance for when businesses should be open and when they should be closed, when to open schools and when not to. But that's guidance for businesses, it's guidance for school districts, it's guidance for states, and it's not something that the federal government is looking at imposing at a national level. And in fact, a big part of the Democrats' pitch all along has been that if you implement masks across the country, and good, safe business practices, then you won't have to shut down the economy anymore. And so Biden's plan does include a national mask mandate. We'll see what kind of difference that makes in terms of COVID numbers. COVID, of course, has been spiking this week. We're likely to see even more cases, I think, as a result of all the celebrations in the streets. I enjoyed watching the people celebrating in the streets, but it is a lot of people packed together in pretty tightly in some cases. And so we could see some kind of a spike in COVID cases from that. But surprisingly, we haven't seen a really strong reaction in COVID deaths yet. So the new cases has been rising, but the the death rates have been rising a lot slower. So with any luck, we have made enough progress on how to treat COVID and how to mitigate the symptoms of COVID that we're not going to see really strong reactions in death rates. But I do know that in places like parts of Texas, ICU beds have now filled up and people are being treated in the halls for COVID. So we shall see. It could be that once hospitals start to reach capacity, then we will see those death rates rise really fast. And then I think all bets are off in terms of what the response will be. It could be that we would see, shutdowns happen again very rapidly if that turns out to be the case, and we see a big spike in death rates as a result of hospitals reaching capacity. So definitely something to keep an eye on. I think that's a major risk for the economy. And the other major risk for the economy is we've had the housing market ripping higher all year, and that has been great for people who own real estate. But a big part of the reason for that is we've had eviction bans and forbearances on mortgages. And as soon as those things expire, I think that we could see a significant correction in housing prices. And it's hard to say how that would affect the economy, but it probably wouldn't be great. I think you could see major business losses at banks that have a lot of mortgage loans out there. You could see, real estate companies take a really big hit, especially the ones that are invested in residential real estate. So definitely that's, I would say, the other major risk for the economy next year is the expiration of all of those emergency measures that affect the housing market. So I would say, hedge your bets, take precautions to protect yourself in the event that there is a major market downturn next year. But also, we might see, especially in light of new stimulus, we might see the stock market go up quite a bit. So it's probably going to be a really volatile year next year, and just prepare for that volatility is what I would say.
I think that, yes, we will probably see really good returns. I don't think we'll see as good as returns as we saw, or as statistically as we've seen. But I still think we will see some growth. But I do agree for the housing market. There's definitely going to be a huge gap in that, in terms of just, people getting evicted because they couldn't afford their mortgage. I know there was all those weird loans that were like pseudo loans that were given out to basically say it's like, okay, if you couldn't pay your rent during this entire COVID period, you just have to, pay what you back owe at the very end. And I don't think anyone can really afford that.
Well, that's all for today's show. Wall Street Petting Zoo is available through YouTube, Podbean, Stitcher, or iTunes. We'd love if you'd subscribe and give us a 5-star review. You can also find us on Facebook and Twitter, where I post news updates throughout the week. We don't do any advertising for the show, so word of mouth is the only way we get the word out. If you've heard anything on the podcast this week that was useful to you, please give us a like or share on your favorite social media platform. We really appreciate your support. You can also support the podcast financially by clicking the referral link to Webull under our YouTube video and opening a Webull brokerage account. Webull's great community and powerful analytics tool make it our trading platform of choice. Thanks so much for listening, and we'll see you back at the zoo next week.
See you.